for the Prevailing Wage Law Program. And I'd first like to thank everyone for taking time out of their day to join us for this session. Our sincere hope is that it's worth your while. We're here to inform, and hopefully at the end of the next 2 hours, we will have done so. As you know, Deborah Wilder is our speaker today. Deborah's the founder and president of Contractor Compliance and Monitoring Incorporated. She started the company almost 20 years ago, and what they do is compliance monitoring for prevailing wage law projects, and that's all they do. And we believe they're very good at it. We've had a association with them since the inception of our program back in July of 2009, and it's been a great relationship, and we look for many more years to come. So with that, I won't take up any more of your time. Just a couple of housekeeping items. We very much encourage questions, and we ask you to use the chat feature to submit those questions as opposed to the raising your hand feature. Also, please know that we are recording this, so we ask that you please mute yourselves to avoid any undue noise in the background. So with that, I'll turn it over to Deborah. Thank you.
All right. Well, thank you everyone for joining us this morning. I suspect some of you have attended the prevailing wage presentation we try to do every year for the Montgomery County contractors. Unfortunately, COVID just hit at the wrong time and we didn't get out there last year. And this year, we're just going to try and do this via Zoom because I didn't want to put it off any longer. Many of you may know or be familiar with Steve Noguera, who runs our East Coast office based here in Maryland. Steve, you want to say a couple of words to everybody?
Yeah, I've been with Contractor Compliance and Monitoring now for 21 years.
I know, I tried to turn it on, but it's not working.
I'm sorry, Michelle, could you please mute yourself?
I took everything.
Michelle?
It says you have 4 hours to talk. This says it's not hooked up to anything.
And I'll try this again. All right, well, try again. Oh, Steve, can you unmute yourself? No. All right, sorry, we had somebody add and they did not want to mute themselves, so I wanted to do that. Let's see if all right, let's try this again. Steve, can you unmute yourself now? There we go.
I'm Steve Noguera. Many of you know me here. Been with Contractor Compliance and Monitoring now for about 10 years, and my office is in Millersville, Maryland. You will be contacting me when you have questions about Montgomery County projects, and I'm here to help. So it's a pleasure meeting you all today.
Great. All right, thank you. We're just going to jump right in here, and I'm going to start with my PowerPoint presentation. We're going to go for, 2 hours, maybe a little bit less. I would encourage you to put questions in the chat box, and we will make sure that we answer those before we obviously complete this process. And as Jack said, we're recording this. So Jack will have that recording probably sometime tomorrow, and we can do that. What you have here on this front page is the contact number for Steve and his email. So if you have questions about any of the projects you're working on for Montgomery County and how prevailing wage works, feel free to give him a call or send him an email. So the Montgomery County prevailing wage overview. So their prevailing wage program was adopted in September of 2008, and it became effective July 1 of 2009. Basically what it does is it requires the payment of prevailing wages on projects that are funded by the county in excess of $500,000. Now, some of you may have worked on prevailing wage projects for the state. And, when the state funds a majority of the projects, then state prevailing wage applies. But if the county funds a majority of the project, and the project's over $500,000, then the county can choose whether it wants to implement its own prevailing wages. And there are a number of counties in Maryland that have done this. Montgomery County was, I think, in the forefront of making this happen in 2008. So what the county did in implementing their prevailing wage project is they basically adopted many, but not all, of the Maryland prevailing wage provisions in their system. So let's start with, prevailing wage covers a work of improvement, which basically means construction. And it covers construction that is on site. So if you're doing something back in your shop, not covered by prevailing wage. It's the on-site work that's covered. Every once in a while, there may be something that's done outside of the actual boundaries of the site, but it is what they call adjacent or nearly adjacent to the site, and it is servicing that site. I'm thinking of a sweeper truck or a water truck, which may not be physically on the site, maybe, directly outside the site, cleaning the area around the construction site. That also would trigger prevailing wage. Work that is not covered by prevailing wage is clearly, work performed in your own permanent shop. Supplier deliveries. So if I've been hired to manufacture the cabinets, and I put the cabinets on a truck and I show up and we unload the cabinets and then I go back, I'm not installing anything. So my supplier deliveries and the time I spend on the project unloading the truck is not covered by prevailing wage. Professional services are generally not covered. So if I have an inspector out there, if I have a surveyor out there, many times material testing, I have somebody come out to, take a core sample and take it back to the lab. Those are not generally covered by the Montgomery County prevailing wage. So who is covered? So basically it is employees on the project. So people who are working with the tools are generally covered by prevailing wage with a couple of exceptions. So there is, so if I've got the tools on and I'm working and I'm framing a door or I'm putting a window in or I'm, installing the roof, that's covered work and that will be covered by prevailing wage. There is something called an FLSA 541 exemption. And what that is that's section 541 of the Fair Labor Standards Act, which exempts supervisorial and management personnel who are salaried and who are supervising 2 or more employees. So clearly, the project superintendent's not going to be covered. If there's a trailer on the job site, the safety officer who spends their time in the trailer and then walking the site but doesn't do any physical work is obviously not covered by prevailing wage. Any administrative staff in that trailer is not covered by prevailing wage. The one thing I want to be really clear about is there is no such thing as a 1099 employee. You either have employees, they can be part-time employees, they can be temporary employees, they can be full-time employees, but they're employees, or you have independent contractors. And independent contractors receive a 1099. That is because they have an independent business that is operating on its own. They are not showing up every day and working under the direction of your project supervisor, and getting a paycheck every week or every 2 weeks. So I want to be really clear because there has been some confusion in the past. The IRS has revised, actually not really changed, has revised their rules on independent contractors. And I just want to be clear, there is no such thing as a 1099 employee. If they're working for you on a regular basis, and they're getting essentially a check from you every week for the work they perform, they're probably not an independent contractor, Okay, so I know there are individuals who are like owner operators and individual contractors, and so they would work for you for a period of time, but they're not working for you, for the whole project or for several months on your project every day, every hour. So I just want to be clear on that. So let's talk about the prevailing wages. So we're going to use the prevailing wage rate that the state of Maryland publishes. And you should know that the state of Maryland publishes those rates once a year. And it's kind of on a rotating basis. So, Montgomery County gets their rates revised, let's just say, in February or March. Maybe Prince George's County gets their rates revised in April. So it's kind of a rotating. Different counties within the state get their revisions on different months, but it's only revised once a year. And so you're required to pay the total amount of the wages and the benefits that are listed on that prevailing wage determination. So obviously wages are going to be paid to the employee on their paycheck, but the fringe benefits can be paid to legitimate, what they call ERISA approved benefit plans, like a medical plan or a dental plan, a pension plan, life insurance, disability, vision, or if you don't have any of those plans or don't have enough value of those plans to meet the fringe benefit amount, then the balance of that is going to go on the employee's paycheck. The IRS has ruled that this is taxable compensation to the employee. So if you're going to pay benefits on the employee's paycheck, it gets included in their regular paycheck and taxed pursuant to the IRS ruling. So what can happen, I'm going to back up for a second. So what can happen is, let's just say you have medical and dental, and it equals or exceeds the amount of the fringe benefit on the wage determination. That's fine. You still have to pay the base wage rate to the worker on their employee, and you can take credit. You can provide proof that you provide these benefits to your employees and the value of those benefits, and that will count towards meeting your fringe benefit obligation. If you have benefits, but they don't quite meet the number, then you would put the balance on the check. So let me explain. If I have a wage rate that's $35 an hour and I have a fringe benefit package, which is $15, that totals $50. And so there's a couple of ways I can do it. I can pay $35 on the paycheck. I may have benefits that equal or exceed $15. We're good to go. I have no benefits, in which case I would be paying all $50 on the employee's paycheck because I have no benefits and I'm paying on behalf of that employee. The third option is I'm paying some benefits and maybe the benefits equal, say, $10, but I have $5 of benefits that I'm just not paying anything for my employees. So that $5 is going to go on the paycheck. So I would get $40 on my paycheck, $10 credit for the fringe benefit, and I'm still paying the total amount of $50. Okay. So the wages are based on the type of work performed. So you can hire me as a laborer, and I can show up on the project and I can unload a truck for 2 hours. And that is in fact laborer's work, and we're good to go. But then, the project supervisor comes over and says, hey, we're a little light. We had a couple people call in sick. Deborah, I want you to go up to the second floor and I want you to hang drywall. Well, what I know about hanging drywall, you can probably put into a thimble. And I go up and I try to help hang drywall. I must be paid the wage rate affiliated with hanging drywall for the 3 hours I spend hanging drywall. And the supervisor comes up and says, oh my goodness, this is the worst, hanging drywall I've ever seen. We are not going to have you do drywall anymore. We are now going to have you paint. So go over there and do some painting. And so I then paint for the rest of my day, which is another 3 hours. And I have to be paid not less than the painter's rate. So it's not based on my skill set. Obviously, I can't hang drywall worth anything, but I spent 3 hours hanging drywall. The contractor has to pay me 3 hours for hanging drywall, and 3 hours for painting, and 2 hours as a labor. So it is clearly the type of work I'm performing and the tools that I am using that determine my wage classification. It is not the title or, or job skills. It's like, well, you don't know anything about hanging drywall. We're going to pay you as a laborer, but go hang drywall. That will not work. So you must classify your workers based on the actual work being performed. Now, if for some reason you're looking through those prevailing wage determinations and you don't see what you do, you're just not seeing a clear definition of a clear classification which defines the type of work you do. My suggestion is you contact Steve in our office and or contact Jack Jabala, and his phone number's right here, and say, hey, we do window treatment, and window treatment is not listed anywhere in here. We don't know what that classification is. We don't see it anywhere. And between Jack and CCMI, we will get back to you with what that is. It could be, well, hey, if you look at the scope of work for carpenters, window coverings is covered under carpenters. Or we could look at a neighboring county's prevailing wage determination and see if they have that particular determination. Or we can have a conversation with DLLR, the state agency that governs prevailing wage, and say, hey, what classification do we do here? The classification of unskilled labor is not the default classification if you cannot identify a proper classification. It is amazing to me that contractors say, oh, well, we couldn't find it, so we're just going to make them all unskilled laborers. No, that's probably not right. 90% of the time, that's probably not right. So if you don't have your classification, please don't hesitate. Pick up the phone, send us an email, call Jack, and we will work towards getting you an answer. Okay. Okay, I had a comment in the chat room. Jack has these slide decks, and of course, we're going to have the recording. So I'm assuming that you'll have access to this recording a little bit later this week, maybe tomorrow, maybe on Monday. All right. So let's talk about, now we understand how wages are paid, and we pay wages for, for regular work during the regular week. There are special rules for Sundays. There are special rules for holidays, but pretty much you can work Monday through Saturday, so long as you do not exceed 10 hours a day, and so long as you do not exceed 40 hours in a week. So, you may not work on Monday and you work Tuesday through Saturday, that's fine. You may work Monday through Friday, that's fine. Again, overtime is required. Overtime at time and a half is required when you work more than 10 hours in one day. So if you're just going to push through and run that 12-hour shift, that's fine, but you're going to pay overtime for those 2 hours that you worked over 10. And, obviously, if you work more than 40 hours a week, that's just not state law, that's federal law as well. Time and a half overtime is required. Special overtime is also required for all Sundays. So if you need to work on a Sunday, you need to understand you're going to be required to pay the overtime rate. It has to do with working Sunday. It has nothing to do with whether or not you worked 40 hours. Let's just say your work week is Sunday through Saturday. So on the first day of the week on Sunday, you say, hey, we got to get out here. We got to get these crews rolling. Nobody has worked more than 40 hours that week. but you're still going to have to pay overtime because you worked on Sunday. So just understand, if you work on Sunday, there's going to be overtime due. There is also holiday pay due if you work on the holidays which are set forth here. New Year's Day, Memorial Day, 4th of July, Labor Day, Thanksgiving, and Christmas. I think those are pretty standard holidays, but understand that if you have to work that day, you're going to have to pay holiday pay. Check the footnotes on the prevailing wage determination in case there are any additional holidays that apply to specific trades. You just want to be sure on that. So I don't know about you, but I went through school and I didn't always read all my footnotes. I said, well, it was important. They would have put it in, in what I was reading. But when you're doing prevailing wage, you absolutely have to check the footnotes, because, if you're not checking the footnotes, then you're only getting 90% of the prevailing wage stuff right. You're missing the other detail, the other, 10%. So make sure you check those footnotes. So typically an overtime calculation is 1.5 times of the base wage rate and only 1 time on the fringes. So let me explain this. In this case, we have a base wage rate of $25 and a fringe of $10. Now, as I explained before, you can pay $25 on the check, and if you have enough fringes, you can get credit for the $10 of fringes that you're paying on behalf of the employee. So when you go to calculate overtime, it's 1.5 times of the base of the $25. And then you also get credit for the fringe, because you're never going to pay overtime on a fringe. Now, in another instance, you said, well, I have fringes, I just don't have enough fringes. So I'm going to put $30 on the base wage rate and only count $5 here in this example. So I can still get to the same $35 package. In that case, you are still going to calculate overtime based on the base wage rate. You only have to pay overtime on that $25, not on the cash fringe that you're paying. And the same example is if I had no fringes at all and I am paying $35 on the employee's paycheck, all of the money on the employee's paycheck. When I go to calculate overtime, I still only calculate overtime on the $25 base wage rate. You never calculate overtime on a fringe amount, whether it's paid separately or whether it's on the paycheck. Now, this can in fact create some confusion with your employees, because if they see they're getting $50 an hour, $50 an hour, $50 an hour, and then all of a sudden we're getting overtime, and what is this? Why am I not getting $75 an hour? Why am I getting something less than that? My suggestion, and this is only a suggestion, is that when you do your payroll, it would be smart of you to have 2 entries for your prevailing wage projects. One, which captures the actual wage rate that you're paying, and another line that shows the cash fringe that is paid on the check. So I'd have 2 lines, one which would be, base wage rate, $25 an hour. The other line would make some reference to, cash fringe, $5 an hour. And so then when I calculate my overtime, my employee can see that they are getting time and a half of the base wage rate. And they won't be confused. And they won't, because an employee is going to say, I'm making $50 an hour. I'm making, whatever it is, $35 an hour. And I'm not getting time and a half of that. And as much as you want to explain it to them, they're still probably not going to be real happy with the explanation because it doesn't make sense to them. If you have a 2-line entry on your payroll system that shows the wages and then the fringes that are paid on the check, it's easier for the employee to understand that you're paying time and a half of the wages. Just a suggestion. There is an exception to this. So if in fact the employee's normal base wage rate is more than the base wage rate for prevailing wage, then you have to pay 1.5 times the employee's regular rate. So let's just say the prevailing wage rate has a $25 base wage rate, but my employee normally is making $30 an hour. I'm going to have to use that $30 an hour and pay overtime on that $30 an hour. Okay, let's move on. So I want to spend a little time talking about what they call a bona fide fringe benefit. What qualifies as a legitimate benefit, which does not, and how you can calculate your fringe benefits. So a fringe benefit has to meet all of these bullet points. It has to be for the benefit of the employee. The employee has to qualify for the benefit. The benefit must be definite and certain. The contributions have to be irrevocably made, and that means like no forfeitures. Then they have to be paid not less than quarterly. Sometimes the benefits have to be amortized, and I'm going to discuss all of these in greater detail. Let me go back and talk about for the benefit of the employee. So clearly things like health and welfare, dental, pension are typically for the benefit of the employee. But if I have a contractor who wants everybody to wear purple shirts with the company logo on it, and the company charges the worker $1 a day for the use of the shirts, because at the end of the week, they turn them back into the employer and the employer gives them 5 clean press shirts or whatever it is. That's not for the benefit of the employee. That's for the benefit of the employer who's trying to, brand their company and market their company. So charging an employee for shirts that they're required to wear on the project is not subject to any kind of prevailing wage credit. You're just not allowed to do that. The employee has to qualify for the benefit. So some of the benefits which you may provide might have a qualification period. So maybe somebody has to be with the company 30 days, 60 days, 90 days, 6 months, a year, whatever the qualification period is. So they have to qualify for the benefit before you can count it. So what that means is you may be putting some of the fringe benefits on the employee's paycheck until the employee qualifies for the benefit. And, and then that'll come off the paycheck and you'll have to explain that to the worker. But they have to obviously qualify for the benefit. Benefits have to be definite and certain. So as many of you may know, CCMI team goes out and interviews workers on the project. And, the typical questions we ask are, who are you working for? What kind of work are you doing? About how much money are you getting paid in wages? Are you getting any fringe benefits supplied by your employer? And so when we ask that question and the employee says, excuse me, and the employee says, oh yeah, my employer pays medical coverage. They know what they got. I don't need them to know that they have a $15 copay when they go see the doctor and a $50 copay when they go to the emergency room. I don't need that level of detail. But they should know that they have health and welfare benefits. They should know that they have dental benefits or a pension benefit or whatever it is. So the benefits need to be definite and certain. The contribution has to be irrevocably made. That means the contribution is made to typically a third party. And it's generally not forfeited. So if you have a company, I'm going to call it sick leave policy or personal day off policy or something, and you want to count that towards meeting prevailing wage, that means that that policy cannot forfeit the hours accrued if the employee leaves. So let's just say, for example, I have a personal day policy where they can use it for sick leave or anything they want, but they accrue 1 hour for every 30 hours worked. And when they leave, when their employment is terminated, I cash them out of whatever they have accrued. If that's how my program is set up, I get to count the value of that program as part of my prevailing wage obligation. On the other hand, if my policy says you can accrue this personal time off, but when you leave, you forfeit this, then I may not count the value that I pay for that program. It's important that all benefits be paid not less than quarterly. And some benefits have to be amortized. So if you're a union signatory, your union agreement already dictates the amount that you will pay on behalf of your workers for those benefits, and that's all good. If you are an open shop contractor, it gets just a little more complicated. If you have a pension plan, it has to meet the Department of Labor and ERISA guidelines. ERISA is the Employment Retirement Income Security Act, and it governs how fringe benefits have to operate here in the United States. There is, if you do a lot of prevailing wage work, there is I call it a Davis-Bacon, but it's a prevailing wage pension plan that's valid in all 50 states, as well as for state prevailing wage, as well as federal prevailing wage. So that's kind of important to take a look at. But I want to clearly point out that profit sharing plans do not qualify for prevailing wage credit. And let me explain why. It's clearly for the benefit of the employee, but most profit sharing plans require the company to make a profit. And if I'm working for you today, I don't even know if I qualify for the benefit. I don't know if you're going to make a profit. You may have a profit sharing plan that says I have to work 1,000 hours in order to participate in the plan. And in April, I have not yet worked 1,000 hours. So I do not yet qualify for that benefit, so you don't get to claim it. The benefit also has to be definite and certain. And here's the problem. We don't know what the contribution is going to be in a profit sharing plan until it's the end of the year, until we determine, did the company make a profit? And then when the company makes a profit, then the company gets to decide, am I going to comp my employees 2%, 5%, 10%? Again, the benefit is not definite and certain for a number of reasons. Quarterly, the contribution is irrevocably made, but it's not paid less than quarterly, it's paid annually. And so for that reason, having a profit sharing plan is a great benefit to your employees. You can count it as a legitimate business deduction, but it cannot be counted for the purposes of prevailing wage. Let me back up for a second on the special Davis-Bacon plan. And when I say Davis-Bacon, I mean all prevailing wage plans. If you do a lot of prevailing wage work, you may want to take a look at having such a plan. It allows you to contribute excess, the fringe benefit amount for which you don't have fringes, into the pension plan. So let's just say I have health and welfare, but the health and welfare is only valued at $5 an hour. I have another $5 I need to put somewhere. I can either put it on the employee's paycheck, or I can put it into a special pension plan that vests immediately. So it's all the employee's money from day one. You also get to save the whole payroll burden aspect of that $5 an hour, and you're providing a really great benefit for the employee. If in fact, instead, you're an open shop contractor and you're paying health and welfare benefits, you're probably not paying them on a per hour basis. More likely than not, you're getting some kind of health and welfare bill or statement once a month. So how do you calculate that into a per hour rate? You take the monthly premium by employee. You don't get to take them all and average them and use that bottom number. You have to calculate this by employee. So when I am setting up my fringe benefits, you know, honestly, you really only have to do this once a year. You don't have to sit there and say, oh, I have to do this every project. Do it once a year. Start at the year, list all your employees, run these calculations, and then those calculations do not change for the entire year, unless, of course, the employee has one of these life-changing events, like maybe they're adding dependents or maybe they're dropping dependents, those kinds of things. So you take the monthly premium times 12 months divided by 2,080, and that will give you a per hour price. So for example, let's just say I have a premium of $600. I'm going to multiply that by 12. I'm going to divide by 2,080 hours. That's all the work hours in the year. And I get a per hour premium of $3.46. So I would get to count $3.46 per hour toward meeting that prevailing wage determination. Now, I always get somebody who says, but you know, this is construction. We don't work 2080. I get that. 2080 is the default. If you're going to want to use a number less than that, you're going to have to prove it up. And you're going to have to prove it up by showing, you know, all the field hours that your company worked last year. Divide that by the number of employees. And so maybe the number is, you know, 1,875 instead of 2080. But as a general rule, using the 2080, you'll never get any pushback from Montgomery County, State of Maryland, U.S. Department of Labor. If you use 2080, there won't be a problem there. The other thing you get to take credit for is amortization of vacation and holiday. Now, usually health and welfare goes to a third party. It goes to a third party provider that takes care of that. If you have a self-funded plan, just chat with us. We can help you figure out, I mean, the calculation is similar. We just have to make sure that there's no forfeitures and the calculations are correct. Now, if you have a written vacation policy or a written holiday policy, you can also take credit for that so long as the vacation is not forfeited when the employee leaves their employment. So it's a super easy calculation. You figure out the total number of accrued hours in a year. So let's just say we have 5 paid holidays and the employee gets 2 weeks paid vacation. So that is 120 hours. So I'm going to take 120 hours times the employee's regular rate of pay. What is that employee going to be paid when they take that vacation or they take that holiday? It may not be the same wage rate that they're receiving on their prevailing wage project. So let's just say I've got 125 hours. The employee's regular rate of pay is $27 an hour. Whoops. $27 an hour. And then I'm going to divide that by 2,080 hours again. And that calculates to basically $1.56. So then I get to count $1.56 toward meeting my prevailing wage obligation. So somebody says, well, you know, how do I document that? I'll be honest with you. I throw all this up on an Excel spreadsheet. Super easy to do. Somebody says, hey, I need to know how you got these numbers. Here's a copy of my Excel spreadsheet, and we are good to go. All right, moving on. So let's move on to apprentices. Now, if you have questions about the wage portion of it or fringe benefits, feel free to post those in the chat. We'll answer those at the end. But let's talk about a minute for the Maryland and Montgomery County apprenticeship rules. So only those individuals who are actively enrolled in an approved apprenticeship program may be paid apprenticeship rates. So we have journeyman rates posted in the wage determination, but you can legitimately hire an apprentice and you get to pay them less than the journeyman wage rate. You're typically going to pay them the wage rate that is set forth in the apprenticeship standards agreement. So if you're getting an apprentice from the IBEW, the International Brotherhood of Electrical Workers, they will say if you get a level 1 apprentice, you're going to pay them 50% of the wages and their health and welfare. And if you get a level 7 apprentice, you're going to be paying 85% of the journeyman wage package and all of the equivalent benefits. So it depends on what the apprenticeship standard agreement says as to what you pay them. But if you're going to use an apprentice, they have to be legitimately enrolled in an apprenticeship program. You can't go down to the local Lowe's hardware store and pick up 5 people who are standing on the corner and say, you don't know anything about construction, I'm going to teach you and we're going to pay you as apprentices. No, that's really not going to work. They have to be enrolled in an official apprenticeship program, or you're going to have to pay them the journeyman wage rate. Even if they don't have the full skill set, if they're not enrolled in an apprenticeship program, you must pay them journeyman wage rates. Now, apprentices count if they're enrolled in a Maryland, Virginia, or Washington, D.C. Apprenticeship Training Council. I have or there. I don't know why I have or there. I should take that out. The rule used to be that to count as an apprentice, you had to be enrolled in a Maryland program, but that just didn't make any sense because you had contractors who come and do work, you know, from Washington, D.C. or Virginia, and it became problematic. So if you have an apprentice that's enrolled in an apprenticeship program in one of these 3 jurisdictions, in Maryland, Virginia, or Washington, D.C., they count as an apprentice and you can pay those apprenticeship rates. Now, you've got an apprentice on the project, which is a good thing. But every apprentice is required to be supervised because apprenticeship is an on-the-job training program. So if I have an apprentice glazier on the project, I need a journeyman glazier on the project to supervise that apprentice. If I have a carpentry apprentice on there, I cannot have an electrical journeyman supervising the apprentice carpenter. So it has to be the same trade and there has to be one-on-one supervision. If for some reason the apprentice is working and they are not supervised, then you must pay the apprentice journeyman wages and benefits for the amount of time that they worked unsupervised. So it could be I have an apprentice working an entire day without any supervision, and they get paid the full journeyman wages and fringe benefits for that day. I could have an example where I have a journeyman working 6 hours and an apprentice working 8 hours. For 6 of those hours, the apprentice gets paid the apprenticeship rate because they have journeyman supervision. But for the 2 hours they worked without supervision, the employer is going to have to pay them journeyman wage and fringe package. The other thing you need to be aware of is that there's also a specific ratio of apprentice to journeyman. That approved ratio is also found in the Apprenticeship Standards Agreement. And in most, well, in a majority of situations, it is a 1-to-1 ratio, 1 journeyman to 1 apprentice. Some trades have different ratios. You have to have 3 journeymen before you can have 1 apprentice, and then it's 2 journeymen and an apprentice, and then it's 1-to-1 after that. I mean, some have very complicated formulas. But you need to look at the apprenticeship standards agreement to see what the apprenticeship ratio is. So let's say instead I have 2 journeymen and 6 apprentices on the project. I have a problem. Because if the standards say I can have 1 journeyman to 1 apprentice, I have 4 apprentices on this project that are not within the ratio. And if that is the case, then those 4 apprentices, again, are going to get paid full journeyman wages and fringes. So just be careful if you use apprentices, and that's a great thing. Just make sure that they are properly supervised and they are employed in the appropriate ratio so they can get the training that they need. As a general rule, the pre-apprentices are not accepted as apprentices on a project. So sometimes you have programs who say, well, you know, our apprenticeship program is full, but we have these people on the waiting list and we call them pre-apprentices. No, they have to be active apprentices enrolled in a program or they don't count. The other thing that's not allowed is employing anyone as a helper or a trainee. Now, I know some of you may be union signatory and your union collective bargaining agreement may have a helper classification. I mean, it's pretty typical, for example, for plumbers to have a plumber helper classification. Can't do that on these public works projects. So you can't have a helper or a trainee. You have to classify your workers in one of the classifications that are set forth in the prevailing wage determination, or they have to be an apprentice. Okay. This is where the county and the state of Maryland differ on their prevailing wage. The state of Maryland, a number of years ago, adopted a separate obligation to contribute a portion of prevailing wage to training committees. I just call it a training contribution. And so if you work on a state prevailing wage the project, you will, you're going to be paying a training contribution to a training committee. Montgomery County did not adopt this requirement for any of its county projects. So if you're working on a county project here, we are not looking to enforce a training contribution that you may or may not be making, okay? Some of you will have agreements with training committees or apprenticeship committees, and you're going to be paying a training contribution to them. That's fine. We can count that as part of a bona fide fringe benefit amount. But we are not going to actively look for contractors who are, making a training contribution or not making a training contribution on the county projects. So I just want to be very, very clear on that. The other thing we do clearly is on-site interviews. So typically we try to get out probably once a month. I know it's been a little tough during COVID, but I think Steve and his crew have done a really good job of getting out to projects. And certainly now that we're hopefully on the mend, we'll be getting out for sure every month. And Steve does a great job with that. Basically, what we do is we want to verify that the prevailing wage rates are being paid on the project and that the prevailing wage rates are posted on the job site. This, in fact, is a specific requirement. It's a state requirement, it's a federal requirement, it's a requirement of the county that you must post the prevailing wage rates at each job site. So when we go out to interview workers, we're also going to be looking for where are those wage rates posted. So when we go out to a job site to do an interview, we're looking to randomly interview workers on the project to see if they're being classified correctly and they're being paid correctly. We ask whenever we do a pre-construction conference, we have like a little conference before we start the project, go over the labor compliance requirements. We ask that employees carry a recent paycheck stub with them. so that when we go out and do an interview, we'll say, what's your name, who you're working for, give me the classification of what kind of, what kind of work are you doing? Oh, I do cement mason work, or, well, I don't know, today I did carpentry, yesterday I did plumbing, yesterday, whatever. So they tell me what they're doing. And we ask them how much they get paid per hour. And I don't need them to tell me they make, $32.13 an hour. But I need them to say, I don't know, I make, 32 bucks an hour, 34 bucks an hour. I'll say, do you get fringe benefits? Does your employer pay any fringe benefits? And the employee says, oh yeah, they pay for health and welfare and pension, or, I get health, or no, no, I don't get any kind of fringe benefits. All that gets captured on an intake form that we take, and then we cross-reference that information with the certified payroll. And again, I'm not looking for the employee to give me an exact amount that they're making per hour. I'm always highly suspicious that an employee tells me they're making, $32.13. That means maybe they've been coached by their employer on what to say. Let me share with you an example of how on-site interviews work. Now, this is an instance that did not occur in Montgomery County, but it occurred on another prevailing wage project for a school district. And we went out and we, did our interviews. And I came in the room and flooring was being ripped up and installed and whatnot. And the project, the crew leader came up to me and said, oh, hi, I'll talk to you. It's like, no, I don't want to talk to you. I want to talk to that employee over there. So I called over that employee and I said, obviously, what are you doing? Are you tearing up the floor? Are you installing the floor? What are you doing? So he tells me what he's doing. And I said, can you tell me how much you're making an hour? And he says, I just got a raise. I'm making $14 an hour. And I said, oh, well, that's really great. Do you get any benefits? He said, no, but I get 14 bucks an hour. That's like a lot of money. And I'm going, that's great. How much were you making before? Oh, I was making $10 an hour before. Okay, so how long have you been working? When did you get that raise? Oh, I got that raise last Friday. How long have you been working on this project? Oh, I've been working on this project now for 2 months. Okay. Hey, thanks. Good, good on that raise. That's great. Let him go back to work. The job site, the lead on that crew is looking at me like, okay, are we like in trouble? And I said, thanks, bye. And I leave. And then I look at the certified payroll that comes in. And maybe that employee is not listed at all. Maybe that employee is listed and they have him listed as making the prevailing wage rate of, 37 bucks an hour. So now I can take the job site interview and I compare it to the certified payroll to see if there's an underpayment and see if there's a problem. If there's somebody's like misclassifying workers, they make everybody a laborer, but everybody's really doing plumbing work. Or if, employees are not being paid the full prevailing wage rate. Now, again, we're not going to squawk if the employee tells me that they make 34 bucks an hour and the prevailing wage is, 37 bucks an hour, because maybe they're thinking in their head, this is what they get net, or, maybe there's some extra benefit that's being paid. But when I get something that says I'm making 14 bucks an hour and the certified payroll says they're making 35 bucks an hour, the lights are going to go off and we're going to say, we have a problem here. So we do take that information and we cross-reference it. Steve's team can interview your workers in English and in Spanish. And that's, again, easy for us to do. Now, let's talk for a minute about forms and certified payrolls. So certified payrolls, for those of you who haven't done this before, it's basically a document that you keep week by week, listing the number of the names, addresses, and social security numbers of your employees, the hours they work, the classification they work, the amount of money they were paid for that work, deductions, etc. We also ask for backup on the fringe benefits that you paid, because remember, wages plus fringes have to equal that total prevailing wage amount. So for those of you who have done other prevailing wage work in other jurisdictions, I'm sure you're all familiar with the actual certified payroll form. Some jurisdictions accept these in hard copies, and some of them accept them electronically. Montgomery County only accepts certified payrolls electronically through a system called LCP Tracker. It is a web-based electronic submission system for certified payrolls and fringe benefits and any other documentation that we need. For those of you who have not used LCP Tracker before, you do not pay for that service. That service is provided to the contractor for free. And you go in and you can enter your payrolls. I will tell you that LCP Tracker does have an interface with a number of payroll programs. So if you use American Contractor or Timberline or even QuickBooks, you may be able to, and this is a separate conversation you need to have with LCP Tracker. You may be able to tag your payroll in such a way that you just push a button and it all uploads into the certified payroll. But anyway, it's pretty super easy to use their program. And payrolls must, and I have to stress this, must be submitted within 14 days after the end of each payroll period. So you're not allowed to work on a project for 15 months and in month 14 upload all your payroll. If you do, you will be subject to liquidated damages. That's essentially a fine for all the payrolls that are late. So we want to keep up to date. So you have to submit these payrolls, again, within 14 days of the end of each payroll period. You also need to account for all weeks on the project. So if you start on the project, let's just say the whole project is a year long. You don't start on the project until month 2. The first week you're on the project, that becomes payroll number 1. You work payroll 1, 2, 3, 4, 5, but then you're off the project for 2 weeks and you come back. You have to provide a statement of non-performance for week 6 and week 7 saying we weren't on the project. And then when you come back and start working on week 8, then you pick up with week 8 and continue to submit that. The reason is if you're missing a payroll, we don't know if you worked and just missed the payroll or if you didn't work at all. And so again, going into LCP Tracker, clicking weekend, click non-performance, hit send. You know, if you're taking more than 30 seconds to do this, you're taking too long. So again, you need to account for every week from the time you start the project to the time you finish the project. So let's say somewhere in month 9, you finish the project. You're going to tag your final payroll as a final payroll. There's a little box you check that says this is my final payroll. And then we know we don't have to look for any more payroll because you're finished and you're done and you're off that project. If for some reason you get called back onto the project, the prime says, hey, I need you back out here in month 9 just for 2 weeks. I need you to fix this. That's fine. You go back into LCP Tracker. You're going to put in non-performance for the weeks you weren't there, and then you're going to put in the week you worked or 2 weeks you worked, and then you're going to check final again. Because we understand this is a construction project, things ebb and flow. So if you get called back out in the project, that's fine. Just make sure you go back and you account for the weeks you were not on there, and then obviously the work that you performed. And then again, check final so we know that, again, you believe you're done and off the project. So let me just back up for a second. So what happens, how CCMI does this is once a month, we go in for each project and we monitor the certified payroll that's been submitted by all the contractors. And we say, okay, we have payrolls that have come in from, March 1 to March 30th, and we review those to make sure the correct prevailing wage rate's been made, that appropriate fringe benefits have been documented. If you have an apprentice, that they're a legitimate apprentice, that they're properly supervised, that they're employed in the proper ratio. And then we create a report. And we create a report and we send that report to Jack, Montgomery County, and we send a copy of the report to the prime contractor on the project. The prime contractor is then expected to review those reports and communicate with their subs to make sure we get corrections, whether it's I'm missing this piece of paper, or you're just not classifying this worker correctly. It could be, your apprentice isn't supervised, whatever it is, whatever correction needs to be made. It might be a piece of paper, it might be restitution has to be paid. And we typically, when restitution is paid, we ask you to amend the payroll and also to provide us with proof of payment, a canceled check or direct deposit or something like that, that shows that the correct wages have been paid. So let's move on to documentation on contractor liability. So the contractor has the obligation to maintain complete and accurate payroll records. That includes time cards, canceled checks, and wage statements. Wage statements are what I call the pay stub, that the employee gets. It says, these are the hours I work. This is the amount of money I got paid. These are my deductions. The burden of proof is on the contractor to have accurate and complete payroll information. If for some reason we have reason to believe that you haven't been paying the correct prevailing wage rate, we may say, oh, we want to see your time cards, or we want to see copies of the canceled checks. Because just because you put it on the certified payroll, unfortunately, maybe that didn't happen. Now, again, that's probably less than 5% of the prevailing wage population out there. But let me share with you a true story. We get certified payrolls. They look beautiful. They look great. We go out and interview an employee, and the employee gives me this story about, well, I'm working, I work every Saturday. I get overtime, but I only get paid straight time pay. So I go back to the company and I say, hey, we want to see your time cards for this period of time for all the workers who worked on this project. And I want to see the time cards, and I want the canceled checks and the wage statements. And lo and behold, the company says, well, here are the time cards. The time cards don't list any Saturday work, but the employee is telling me they're working Saturday, and that gives me some concern. But magically, there are no canceled checks. I don't know. The bank couldn't get them to me. The dog ate my homework, whatever it is. Well, when we finally drilled down on that, we found that the employer was underpaying prevailing wage, as well as not paying for weekend work. So it's not unusual if we find something that just doesn't jive, that we will be asking for time cards, canceled checks, and wage statements. And we're allowed to do that on behalf of the county. The contractor will be liable for any underpayment of prevailing wages by all sub-tier subcontractors. So what that means, if I'm a prime and I have a sub, and the sub has another sub, a sub-tier sub, and that sub-tier sub doesn't pay prevailing wage and they go out of business, the first line is that subcontractor is liable for the wages to be due to those workers of that sub-tier. But if for some reason that subcontractor doesn't have the money, goes out of business, refuses to pay, the prime contractor is the guarantor of all the wages that are due on that project. So it could be the prime contractor who ends up paying the wages for the sub-tier subcontractors' workers. So be aware that it's important that not just your own crew, but any subcontractors you have are also complying with prevailing wage. Liquidated damages, as far as relating to late payrolls, underpayments and whatnot, they will be applied to the various subcontractor, but the money will be withheld from the prime contract. The county doesn't have a contract with the subcontractors or sub-tier subcontractors. They have an agreement with the prime. And if during that project we find that there's somebody who's not being paid the correct prevailing wage rate, we will in fact withhold that amount of money from the payment that goes to the prime. So of course, it's very important, and the prime, I'm assuming, will withhold money to their subs. But it's important to understand that the county will withhold money to the prime if the subcontractors do not pay the correct prevailing wage rate. So let me go over with the liquidated damages provisions that are in the current county law. There is a $10 per calendar day payment, late payment, if the payroll is late more than 14 days after the close of the pay period. There is a $20 per worker per day for a wage underpayment, which includes overtime that's not paid correctly and for a worker misclassification. So if you call somebody a laborer and they were really doing carpentry work, the penalty is $20 per worker per day. Even if once we call that out, you correct it, the penalty, the liquidated damage amount still applies. And there is a $50 per day liquidated damage for the prime contractor who does not post prevailing wage rates on the job site. So, hold on, I have a question here. Is the purchasing office including in the solicitation LDs for prevailing wage over and above any LDs for actual construction? So these LDs are in addition to any additional LDs that may be assessed because maybe the project's late, beyond maybe there's daily liquidated damages if the project's late. These are independent of and in addition to any of those LDs relating to timing on the project. These are all set forth in the county ordinances and the county rules and laws. So all contractors are deemed to be aware of these. We also cover this in any pre-construction conference that we do. So this should be of no surprise to anyone if there are late payrolls or workers are not paid correctly. So many times contractors are confused. They say, well, we fixed this. You told us to fix it and we fixed it. That's great. But you didn't do it right and you wouldn't have fixed it if we hadn't called it out. So we're still going to impose those liquidated damages. Okay. So let me just compare some LDs if you think these LDs are particularly high. And I just did a comparison with California, which in my opinion is the most complicated of all prevailing wage states. So Maryland, if your payrolls are delinquent, it's $10 per day. In California, it's $100 per day per worker. So if I have 5 workers on the payroll and I didn't turn my payroll in on time, that's going to be $500 a day. Really outrageous. If you have underpaid wages or misclassified your worker, Maryland has a $20 per day per worker fee. California has a penalty of up to $200 per day per worker. Sometimes you can negotiate that down, but they're way above $20 a day. And then failure to post the wages on the job site is a $50 a day penalty in Maryland, which California doesn't have. But California has, if you have an apprenticeship violation, it's $100 a day for every day you're on the project. So I just wanted to give you a little perspective here. Not that any of you are going to rush out to California and do prevailing wage, but I wanted to let you know what other states are doing. So here are some links and resources that may be helpful to you if you're fairly new or you have labor compliance people in your office who are fairly new to prevailing wage. Here are some, here's the county website and the frequently asked questions, which I think is helpful. Now, I want to move on and I want to talk about Davis-Bacon, federal funding on the projects and how it applies and how it is different. So federal funding of $2,000 or more triggers federal prevailing wage, which is typically referred to as Davis-Bacon, named after Senator Davis and Congressman Baker. It was passed in 1931. And so when you have federal money in your project, the project converts, if you will, to an all Davis-Bacon project. So we're not looking to impose the Davis-Bacon rules and the Montgomery County rules. Some jurisdictions do that, but not here. So if you have federal money in the project, then we're only going to impose the Davis-Bacon rules. So let me take just a minute to go ahead and share those requirements with you. So when there's a project that has federal Davis-Bacon, the actual federal wage determinations are published in the bid specs. You will find them, sometimes they can be, multiple pages, like, 20 pages worth. So the wage determinations are published in the specifications. Also, it's required that the agency include what I call Davis-Bacon language. It's language that says this project is subject to federal Davis-Bacon. And they talk about, the Contract Work Hours Safety Standards Act, which is their overtime requirement after 40 hours in a week. They talk about the Copeland Anti-Kickback Act. So, kickbacks obviously are not allowed. So it's a fair amount of language. It's probably a minimum of 3 or 4 pages, can be more than that. So clearly, when you get this bid spec that this is going to be covered by federal Davis-Bacon. It's got the contract language in there and it has the federal wage determinations. The wage rates for Davis-Bacon lock in on the bid date, so long as the contract is awarded within 90 days. If the contract is not awarded within 90 days, and this particularly deals, if any of you do any of the housing projects here in Montgomery County, construction has to start within 90 days of closing the deal, okay, as opposed to a contract award. If not, then you've got to pull the current rates, and the current rates are the rates that are going to apply. You may find that the county may come back a few days before the bid and say, hey, there's been a change in the Davis-Bacon determination. Here are the new rates. These apply. There's a requirement that the county go back 10 days prior to the bid and see if there's been any changes in the prevailing wage rates. And if there are, they have to communicate that with the contractors. And then those new rates will be the rates that apply. So what's happening? We put a bid on the street on February 1. The bid date is April 15th. And so on April the 5th, the county goes back and says, oh, wait, There's been some changes in the prevailing wage determination from the time we originally issued these. And here is a copy of the updated wage determination that was published, March 20th. And here's the new determination, and these are the wage rates that have to be used, and those are the wage rates that will be enforced on the project. So once again, wages are paid based on the classification of work performed, not their job title, not based on a union agreement. I have contractors who say to me, but my union agreement calls this person, whatever, a technician 3. I'm going, that's really nice, but a technician 3 is not a classification that is recognized by the Davis-Bacon wage determination. So you've got to pick one of the wage determination classifications that most closely fit what is transpiring on the project. You need to know that the Davis-Bacon rates and classifications are not identical with the state of Maryland or the Montgomery County rates. So you may both have inside wiremen, okay? But, maybe the Montgomery County determination has a communication and tech 1 and a communication and tech 2. But when you look at the Davis-Bacon, they only have one classification of communication and tech. So you can't just do an automatic, oh, I paid this over here in Maryland, I'm just going to pay this classification over here in Davis-Bacon. You actually have to look at the wage rates and look at the classifications and make sure you are properly classifying the worker under the Davis-Bacon determination. Some of you may know that Davis-Bacon issued a ruling in 2013 saying that surveying work was now covered by prevailing wage. That was reversed in December of last year. So all agency memo, that's what AAM stands for. All agency memo 235 says, just kidding, we are no longer going to make surveyors subject to prevailing wage. So AAM 235 reversed AAM 212. Maybe you never do surveying work, so it's not an issue, but I wanted to let you know that's been a change in the federal prevailing wage law. Again, sometimes when you look at the federal determinations, you're not going to see a classification in there that that you're going to perform on the project. The U.S. Department of Labor has a very formal process where you can say, hey, you missed this classification. We need this classification. I refer it to as an omitted classification. You omitted this. I don't have this. You file a document requesting what's called a conformance, and you're going to use form SF 1444. It should be done as soon as possible. You can even do it before the job starts, but you have to do it before the work at issue ends. So you can request it at any point in the project, but obviously earlier is better. This is a copy of an SF 1444. If you have never done one of these forms, I would encourage you not to do this all by yourself, thinking, oh, I can just fill this form out and I can send it in and everything will be great. No, there are very specific rules about how this form has to be completed and how it has to be submitted. Up here at the top, you're going to check the box that says this is a construction contract. Okay. You're going to fill out the information about the project site, the location, the project number. You're going to put in here the classification that you want. Let's just be crazy and say, they didn't have a plumber classification. You could put in plumber. You would put in the wage rate that you want to pay. You put in the fringe benefit amount that you want to pay. And then down here, this form has got to be signed by multiple parties. It has to be signed by the prime contractor. If this impacts a subcontractor's work, the subcontractor has to sign it. An employee has to sign it. It can be an employee, or if you're union, the union business rep or shop steward can sign it. But if you're not union signatory, you need an employee who's going to be paid this wage rate to sign. And they have to check whether they agree or disagree with this wage rate. And then we've got to have Montgomery County sign this. And so Montgomery County has to check a box whether they agree or they disagree. And then all that gets signed. But before you send it off, in fact, you're not going to send it off. We're going to get this whole thing done, and then CCMI is going to help send this off to the Department of Labor Wage Hour Division Conformance Office. Unfortunately, we do this all by email now. But I'm not going to send just this form because I want an answer really quick. And I don't want to have to wait 6 months. So what we include behind there is I am going to ask you for a scope of work. What is the scope of work that this person is? Maybe you're, instead of plumbing, you're looking for window covering installation. Okay. Give me a definition. I need a scope of work that defines what this classification is. Give me the skill set, give me the tools, give me a scope of work. Then I'm going to ask you, where did you get these wage rates from? Maybe you got them from a collective bargaining agreement. Maybe you got them from the Maryland prevailing wage rates. Maybe you got them from a neighboring county has this particular classification and wage rate. But I want to provide whatever backup we can to the Department of Labor as to where we got these wage rates. Because when this arrives in the conformance office, the conformance officer's like, okay, I have this determination, this is a request, and now I have to go research. I have to go research scope of work. I have to go research wage rates. Oh, but wait, they included a scope of work. They included the backup for the wage rates. So now my document gets turned around in 30 to 45 days instead of, 3 months, 4 months, 5 months, whatever it is. So I want to help you make sure we get a conformance for the classification we need. One of the things I want to talk to you about, though, is you cannot get a conformance by taking an existing classification and splitting it down into lesser pay based on experience. I know that was probably a convoluted explanation, but let's just say I'm laying carpet for this project, and a carpet layer gets paid, I don't know, $35 an hour. But I want to have a carpet layer 2 classification that applies to anybody who's working on the project, who's assisting with the carpet laying, who has less than 2,000 hours experience in the field. The Department of Labor will not approve that. They will not approve, you trying to pay less for a carpet layer because they have less experience. So it has to be a distinctive difference. Like I have carpenters who are basically doing framing, and I have carpenters / window treatment people who are installing blinds or louvers or shutters or whatever it is they're doing. You have to be able to call out the classification clearly. They will also never approve a trainee or a helper classification. I had a union plumbing contractor who insisted on requesting a conformance for a plumber helper classification, even though I told them the Department of Labor will not grant this. They said, I want to do this. And so we sent it off, and sure enough, gosh, it didn't even take 30 days. It came back and it said, nope, no plumber's helper. You're going to have to pay this individual based on what they're doing, and they either get paid as a plumber, or they could potentially be paid as a laborer depending on what tasks they're performing. So what happens is once we submit this form is the Department of Labor issues a letter, and the letter comes back to the county, does not come back to you, does not come back to me, comes back to the county. And it says, this is in response to the conformance requests that you sent. And we agree. You can pay this classification and this wage rate, and that is retroactive to the beginning of the project. And it applies to any other contractor on the project who's performing the same work. That's great. If the Department of Labor disagrees, you get a letter, or the county gets a letter that says, hey, we disagree with this conformance, and the contractor who's performing this work must pay, and they identify the classification and the wage rate. So you have clear directive back from the Department of Labor during the project. So if you are requesting a conformance, you put it in, you can continue to pay that worker at that rate that you're requesting. But if the Department of Labor comes back and says, no, we're not going to allow you to do that, you've got to classify and pay in a different classification, then you have one payroll period to pay all the restitution. So you have to go back to the beginning and pay any restitution that you owe. And then moving forward, you have to use the classification and wage rate that the Department of Labor said needed to be used. Now, let me review a couple other things required by the Davis-Bacon Act. Wages must be paid weekly. I know a lot of contractors already pay their employees weekly, but some do not. Some, pay them every other week. If you're working on a Davis-Bacon project, the employees must be paid weekly. It is a violation of the Davis-Bacon Act if, in fact, they are not paid weekly. There is something called SWSA, which is the Contract Work Hours Safety Standards Act, and it requires time and a half be paid for all work over 40 hours in a week. Now, most of you are probably familiar with the Fair Labor Standards Act that has a 40-hour overtime. The SWSA law was around long before the FLSA was, and so on public contract, Davis-Bacon Public Contract Act, this law is the law that is implemented, because this law also allows the Department of Labor to impose a penalty if you fail to pay overtime after 40 hours in a week. One of the things you need to look at on the Davis-Bacon determination is you need to look and see if in fact there are any holidays listed. And, I've been doing this a long time. And, back in the day, you could work your employees, any day during the year, and there were no holidays and there were no vacation requirements or any of that. Over the last 5 to 10 years, I've started to see holidays creep into a Davis-Bacon determination. I've seen even vacation pay creep into a Davis-Bacon determination. So you want to look at the bottom section for your craft. So if you have painters, look at the bottom section of the painter's classification to see if there's any holiday or vacation. Okay. If it's going to be there, it'll be in that section. Be aware that a lot of the federal holidays include Veterans Day. I've had some include Columbus Day. So just be aware that there could be additional holidays listed in the Davis-Bacon wage determination, and you want to take a look. I want to talk for a minute about this crazy thing that Davis-Bacon has called melded overtime. And then I'm going to tell you how you can create a protocol that will make you not have to do it this way. The Federal Department of Labor decided that they needed to implement this melded overtime rate because there was an inordinate amount of overtime all being performed by unskilled labor. It's like you can be a carpenter during the day, but if there was overtime, everybody was an unskilled laborer. So they said, no, we're just not going to buy that. So if you have an employee that works in more than one classification in a week, you will pay straight time for all those hours. If we work 22 hours as a laborer and 25 hours as a carpenter, we figure out what that straight time is paid. But to figure out the overtime, I take the total compensation divided by 47 hours, and I get this crazy melded rate. It's not the carpenter rate, it's not the laborer rate, it's this crazy melded rate. And then I pay overtime. You have to pay time and a half. I pay the extra half-hour time based on this melded rate. So I'm going to tell you that your payroll department is going to run screaming from the room if they have to do this every week for every overtime. So this is the rule, and let me tell you what the exception to the rule is. The exception to the rule is the employer has a policy which they have communicated to their employees before work began. The policy is super simple. This company will pay you your overtime based on the craft classification you perform during those overtime hours. The employee has to agree. So what I do is when I have a new hire, I say, this is the company's overtime policy. Please sign here. The employee signs, we're all good to go. But then here's the kicker. The employer has sufficient documentation to support that overtime. So I don't have a time card that says I work 22 hours as a laborer and 25 hours as a carpenter. I have a time card that says on whatever day it was, on Friday, when I'm working my extra 7 hours, 3 of those hours were at labor and 4 of those hours were as carpentry. And I pay that overtime based on that. Or all 7 hours were carpentry, or all 7 hours were labor. So you have to have the tracking and the backup to show when that overtime was worked and in what classification. Davis-Bacon apprentices. So when you have an apprentice that is enrolled in an approved apprenticeship program in Maryland, Virginia, or Washington, D.C., there is a reciprocity agreement that those apprentices are automatically enrolled and approved for training with the Department of Labor Office of Apprenticeship. They generally must be also employed in a proper ratio based on what's in the Apprenticeship Standards Agreement. So if the Apprenticeship Standards Agreement says 1-to-1, that's great. If they say, 2 journeymen to 1 apprentice, that's what you have to follow. Again, they must be properly supervised, and there are no pre-apprentices. Here is a copy of the federal Davis-Bacon poster. So the prime contractor should be posting this someplace where the employees can see it. And along with this should be a full copy of the prevailing wage rates that apply to the project. So typically what I do, and this is where if you don't receive proper pay, this is an entity right in this box. You're going to put in CCMI's contact information. So if someone thinks they haven't been paid the correct prevailing wage rate, they can contact us. So we're going to put Contractor Compliance and Monitoring, Steve McGarrah, his email and phone number, or at Jack's option, you can put in, Jack's name, address, and phone number. But this poster has to be posted, and we also have to include the wage rates have to be available so that the employees can take a look and see if they're being classified and paid correctly. This form comes in English and it comes in Spanish. Super easy. Google Davis-Bacon poster. It'll show up in English. It'll show up in Spanish. It's quite easy to do. Davis-Bacon also requires that you only employ individuals who are legally able to work in the United States. They don't have to be citizens, but they have to have a work visa. So it can't be somebody who's here illegally. You can't employ somebody who's here on a student visa as a worker on the project. So new I-9 forms came out October of last year. If you're using old forms, just go pick them up. So the Department of Labor, if they come out to audit, can request all of your I-9 forms. Now, we don't request them during the course of the project, but you need to know that the Department of Labor can ask for them if they want. And somebody says, well, like, when do they ask for them? Well, usually if the DOL actually comes out for a physical audit, they will want to go out to the job site and walk around and interview people. And I was on a project one time with the Department of Labor auditor, and we walked out to the project and I watched, 12 guys run for their trucks. And so the DOL officer said, and who is that contractor? I'm going to want to see all those I-9s. So there are monetary penalties that attach with employing people who are not legally able to work here. So let's just not go here. Most of the time we have an audit, there is not an I-9 request, but you just need to know. You have to have this information. If you are obviously doing work on federal contracts, most employers I know use E-Verify, which is a great system. I had for a time an employee who had a work visa who worked for me. And, I said, well, let's just see if this works before all the citizens came up without a problem. And I put in the information, and sure enough, up comes his picture and his work visa, and everything's great. He's now a citizen, not a problem, but you can be, you probably, if you do a lot of federal work, you should be using E-Verify. So I have lots of links here that will help you. You're not going to have to worry about wage determinations. The county is going to be the one that's going to include those for you, but you can go look for the wage determinations. If you're brand new to prevailing wage, this is kind of like an overview, kind of a basic overview. But there are two things, there's a couple of things here that are really helpful. So the Department of Labor publishes something called the Field Operations Handbook. And I want to say it was last updated about 4 or 5 years ago. But here's the link. Chapter 15 is a Field Operations Handbook for Davis-Bacon projects. It talks about this whole amortization of benefits. It talks about what's covered work, what's not covered work. It talks about what's a bona fide fringe benefit. It talks about apprenticeship. It's written in layman's terms. It's a great resource. I have it, and all of my staff has it on their laptops. And then, of course, this is the federal Davis-Bacon certified payroll report. Now, you're not going to need a hard copy of this because all of your certified payroll information is going to go into the LCP tracker. But the certified payrolls that print out are going to look like this WH-347. So even if you're working on a Davis-Bacon project for the county, you're still going to be using LCP tracker, and we're still going to be collecting those payrolls and reviewing it along with your fringe benefits and any of the apprenticeship requirements that get triggered. Now, Davis-Bacon does in fact have their own set of liquidated damages, but most of the time, there's not a monetary penalty. So first, if for some reason, you didn't classify somebody correctly, you didn't pay the correct prevailing wage rates, and the Department of Labor comes into audit instead of CCMI, what will likely happen is you will get a letter from the Department of Labor saying, yeah, you just didn't do this right, and this is kind of like a letter of reprimand, and you need to fix this and go forward, and don't make this a mistake again. That's pretty typical for an honest mistake. The other penalty that they can impose is debarment. And what that means is if you have done something egregious, they are going to debar you for a time period of 1 to 3 years. That means you cannot work on any project that has any federal funding in it. So it's not just saying you can't just go work, you cannot work on a military base, which would be a pure Davis-Bacon project. It also means you can't work on a Montgomery County project that has Davis-Bacon funding in it. So that's a pretty serious consequence. And so obviously we're not going to want to avoid that. But debarment is generally used in only two situations. One, we've got somebody who's a repeat offender. And it doesn't have to be a big thing to be a repeat offender. And let me share an example with you. I had a contractor who, got audited for their, on this Davis-Bacon work they were doing, and they paid all the wages, but for some reason, they were not paying their employees weekly. They were paying their employees every 2 weeks. So they got a reprimand letter, and it says, although your wages were good, you have not complied with paying your workers on a weekly basis, and you understand that you have to do this every time you work on a Davis-Bacon, a project that has Davis-Bacon money in it. And the contractor said, yeah, we get that. So 2 years later, the contractor gets re-audited on a different Davis-Bacon project and paid all the wage rates correctly, but for some crazy reason, never implemented the change, and we're still paying the workers every other week. So the contractor gets a letter and says, hey, you paid the correct prevailing wage rate, but you still haven't fixed this, and you're going to need to fix it. You have to, do you understand that you have to pay your workers weekly? And the contractor says, yeah, I understand that. I'm going to fix it. I'm so sorry. My payroll person, who is supposed to be doing this, has been with me like, 15 years. She left 18 months ago, and, the new person didn't pick up on it, whatever the excuse was. So a year later, he's on another Davis-Bacon project, and he gets audited. And once again, wages are great. He still hasn't changed his payroll. He still isn't paying the employees on a weekly basis. Department of Labor says, I'm sorry, we caught you the first time. We told you the second time. This is the third time. You're being debarred for 3 years. So it wasn't even for a wage violation. It was for the fact that the contractor wasn't complying with all of the requirements of Davis-Bacon. So the repeat offense wasn't it wasn't like a big monetary thing like, oh my goodness, you didn't pay your workers the correct prevailing wage rate. It was more about, you didn't comply with what we told you to do. So we got debarred. Now, a contractor generally isn't debarred for a first-time offense unless it's really, really egregious. So a contractor who takes kickbacks, that's pretty egregious. That's actually a federal crime. You would probably be debarred for that. Hopefully, we never run across one of those in Montgomery County, and all will be well. There is a monetary penalty if overtime is not properly paid. So if you're on a federal Davis-Bacon, a project that's funded by federal Davis-Bacon, and you do not pay overtime after 40 hours a week, then there's a penalty of $27 per day. That is the current penalty. The penalty is adjusted annually. It's tied to the cost of living increase. And so this penalty for years, for decades, was $10 per day. And then under President Obama, he said, this is crazy. We're going to index this. And so the penalty has continued to increase. So last year it was $27. This year it was $27. Next year it could be $29, $31, whatever. But the penalty will continue to increase over time. Again, not a large penalty, but a penalty nonetheless. So I have purposely left 15 minutes at the end of this presentation for you to ask your questions. And so I would encourage you to post any questions that you have in the chat box. You have our address here in Maryland, and Steve Nagara staffs that office along with some additional CCMI staff. I've also given you my email, but more likely than not, I'm going to turn you back over to Steve unless it's something he can't answer. But you also have my contact information there as well. So with that, let me go ahead and go to the chat box and see if I have any questions. And Steve, you can think about whether there's anything you want to add. So let me just share a couple of things. So the PowerPoint presentation and the recording of the workshop will be posted on the county website, either tomorrow or Monday. It takes a little bit of time for my system to do whatever it needs to do with with the recording. And then I will forward that over to Jack, and then that will get posted. So don't be too impatient. It may not be there today, but it should be there probably, either tomorrow or Monday. Question is, where does one find the Apprenticeship Standards Agreement that I kept talking about? So the Apprenticeship Standards Agreement is something that is written by the apprenticeship program itself. So most of the time, if you're going to use an apprentice, you already have an agreement with and are already affiliated with an apprenticeship program. So for example, if I'm union signatory with the International Brotherhood of Electrical Workers, I already have an affiliation with the IBEW's Apprenticeship Training Committee, and I would go to that committee and I would say, what is in your apprenticeship standards for ratios and wages and benefits? Okay. You could be affiliated with an open shop program. There are apprenticeship programs. I don't know off the top of my head, but I believe groups like Associated Builders and Contractors may have approved apprenticeship committees for some trades. So if you're a member of ABC, you might be allowed to use their program. Again, I don't want to speak for ABC, but ABC a lot of times has open shop apprenticeship programs. So you would go to that apprenticeship program and say, what is in your Apprenticeship Standards Agreement? The Apprenticeship Standards Agreement is the agreement that details the training and the wages and the benefits and the ratios, and all of that is approved by the state, which approves the apprenticeship committee, or it's approved by the U.S. Department of Labor's Office of Apprenticeship. So that's where you go and you get those Apprenticeship Standards Agreement. Typically, if you're not affiliated with a program and you just go ask for, hey, I want some apprentices for this project, most of the programs I know of, in fact, all the programs I know of, will say, that's great, but you have to sign an agreement to be affiliated with our apprenticeship program. And, these are the rules. This is what you have to pay, and this is how you do it. All those apprenticeship programs also require some type of training contribution for all hours worked by your journeyman and your apprentices. So again, that training contribution can count towards your fringe benefits, but it does cost you some money to be affiliated with an apprenticeship program, because some of that prevailing wage amount will have to be paid to training. Not necessarily a bad thing. Training the next generation of apprentices is always a good thing. But if you're not already affiliated with the program, you can, we could take a look and see what programs are available that you could possibly talk to. They would probably also be listed on the DLLR site. In the chat box, they have put a link to a survey. The county would very, very much like you to answer the survey. If you loved the seminar, make sure you say that. If you hated the seminar, hopefully nobody hates the seminar. So I hope this was helpful to you. Steve, is there anything you want to add to this? Or Jack, is there anything else you want to add? I'm going to stay on and see if there's any more questions in the chat.
Yes, just one thing, Deborah, an update, if you will. You mentioned DLLR, which for those who don't know is the Department of Labor Licensing and Regulation. It was also known as DOLLAR. I say was because they did change their name not too long ago. It's now just the Department of Labor. So just a update.
You are right. I apologize. I missed that.
Thank you, Deborah. I think you did a wonderful job as always. And we just look forward to continuing our relationship going forward.
Yeah, Steve?
No, nothing to add. Just if you have any questions, please don't hesitate to contact me. We'll find the answer for you.
All righty. I will stay on for just a few more minutes if somebody comes up with a last minute question, but thank you all for attending. And like I said, I'll get the recording to Jack fairly soon.
Thank you so much.
Thank you, Deborah.
Okay.